Welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest today is Peggy Martin. Peggy is a fee-only financial planner with the Family Wealth Consulting Group. She has more than 31 years. No, it must be somebody.
Someone else they're talking about.
Yeah. Anyway, she works in the financial services industry. She assists clients with family wealth planning, including legacy, financial, estate, investment, and insurance planning. Her credentials include a master's in science in financial services, hard won, okay, chartered financial consultant, chartered life underwriter, fellow, Life Management Institute, and chartered advisor for senior living. So Peggy, thanks for joining me today.
Mike, thanks for having me. Pleasure to be here.
Great. Today, Peggy and I are talking about socially responsible and sustainable investing. And so there's a lot of thoughts about investing these days. People are nervous and worried about a lot of other things, but they're also, I think, thinking more in this social vein. And so that's why Peggy and I decided to talk about it today. Peggy, why do you think there is a current interest in socially responsible investing, sustainable investing?
Well, one of the new buzz phrases for socially responsible investing or sustainable investing is personal values investing.
Okay.
So the root of the investment methodology is from values. It's values driven. Mm-hmm. And there's two different forms. There is socially responsible and there's sustainable. With socially responsible investing, it's socially conscious, it's ethical, it is an investment strategy to do social good while still being able to earn a reasonable return on the investment dollars. Mm-hmm. Sustainable investing is related to socially responsible. It's kind of like the cousin to it, or maybe the big sister or little sister, however you want to look at that. Okay. That sustainable investing includes environmental issues and social factors when making the investment choices. It tends to have great emphasis on environmental, where social investing is more around the humanness. How is the investment methodology taking care of the relationship with other people? Sustainable is how is it taking care of the environment? So a good way to distinguish between the two, and some portfolio designs encompass both. Lots of folks are very, very concerned about what's going to happen tomorrow. Sustainable investing takes care of today without compromising what's going to happen tomorrow. So what are my grandchildren going to experience in their environment? What are my great-grandchildren going to experience? And other future generations? Are we going to leave this world with something left for natural resources? Mm-hmm. So that's what the sustainable folks look for. That's what's important to them. So I thought when I read a recent article that personal values investing, that kind of encompasses what goes on with socially responsible and sustainable investing.
Yeah. So I have a number of clients as you do, but and in some ways, I think that maybe this is more prevalent with women than with men, but I do also actually have some men also, and they express concerns to me about what's going on with the environment and trying to contribute in a positive way, and if you will, to make the world hopefully a little bit better place for the grandchildren and so forth that are coming along to get along in.
That's right. Yeah. We've had as the baby boomer generation, we've had the advantages of so many resources, whether they be resources that have come from technology, from our environment. We've just been a generation that's been able to utilize the very best of that, and hopefully we'll leave some so that our grandchildren can experience that as well.
I think another thing, before we move on to some of the sort of talking about this area in general, is I think the other concern is that we're becoming a global economy, a global environment. We're seeing growth really around the world. Correct. As far as the market economies and so forth, everything opening up. And so when things were pretty much, the United States, I mean, we were consuming an awful lot of the world's resources, but now everybody else is growing. And so when we say sustainable, is it going to be able to hold up? Is our world going to be able to support an economy that is dealing with so many more people and so forth? So we've got some big challenges ahead of us.
Hard questions to answer, and possibly sustainable investing is just one component of being able to maintain those resources.
Right. Okay, well, how significant has this area become as a growth area?
Well, I'll tell you, back in 1995, there were about $695 billion under management with social investing concepts. Today, we're up to $3.74 trillion.
Wow, that's a big increase.
That's a huge increase. And it puts into perspective, though, in 2009, when we were still in the throes of a very bad economic crisis, the growth that started with socially responsible and sustainable investing was 22% from the middle of 2009 until the end of 2011. So that shows that there is a shift in thinking. People are wanting to, again, help the environment while helping themselves, or help others while helping themselves.
Mm-hmm, mm-hmm. Well, how many choices are there for mutual funds in this area?
Well, today I'm going to speak specifically to the funds that we work with,
okay.
Because that is the portfolio design that we create to have global diversification within the socially responsible, sustainable investment area. We have 5 superior funds that we're able to work with. We have a U.S. social, which is large cap stocks. We have a U.S. sustainable that has just come out at the end of last year. So that's growth in our mutual fund provider in this area of investments. We also have international socially responsible, a core fund, and international sustainable, also a core fund. And again, those funds are in either U.S. large stocks or international large stocks. But also we have an emerging market socially responsible fund, which the very nature of emerging markets sometimes portrays to the public that they're not socially responsible, that they maybe don't care from the human standpoint what labor laws are in place and so forth. And this particular fund provides that. So it gives our investors the opportunity to have the growth in the emerging markets while matching their personal value system.
Mm-hmm, mm-hmm. So these are some of the choices that you focus in. I guess the main message is you have asset classes that you can build portfolios with in a modern portfolio type of a system.
With our design, if someone comes in and takes a U.S. core fund, an international core fund, plus the emerging markets fund, the global diversification that they will have is about 7,500 stocks around the world. So that gives them very good diversification so that they can have the returns of the global marketplace within the social, responsible, sustainable environment.
Yeah. And meanwhile, if people want to do this on their own or whatever, there are hundreds of other funds for choices.
There are lots of choices out there, and my recommendation would always be work with a trusted advisor before picking any of the funds. Some of these socially responsible funds, the expense ratios inside the mutual funds can be large. We're fortunate that we work on the institutional side, so with a global portfolio design, your expense ratio is going to run you something about 0.5% to 60 basis points. So you're getting good quality funds for a very low price. On the retail marketplace, you might be paying something close to 2% to get those same funds.
Okay. So what's important for people to bear in mind related to that, we're talking about expense ratio. That means that, in a sense, that's how much you have to pay for somebody to administer this thing.
Before getting any kind of advice.
Yes.
This is where you've just gone out to pick the fund yourself on the retail marketplace. You don't know much about it, and you're socially responsible or sustainable, and their brochure looks really good to you.
Yeah. Somebody has to do an awful lot of due diligence, in some cases, in screening these things and so forth. And so again, for some of these funds, because the fund isn't that large or whatever, that's why you're getting these high ratios. And it means in a sense that every time that you've got like an additional 2%, it's a little bit like you're trying to run the 100-yard dash and you're spotting somebody a couple of seconds. And so it's just hard to catch up when you've got these expenses.
Correct.
Okay. What are some of the individual industries that people have been interested in for these types of investments?
Well, I think the most important thing with that is what is the shareholder advocacy versus what is the product? What is the shareholder advocacy? Do they have a good corporate citizen point of view? From the corporate level and also to the individual shareholder level, the board of directors level, what is their thinking about corporate good citizen? Again, is it something that they're helping others or is it that they're helping the environment? But having that advocacy is, I think, critical for the socially responsible and sustainable investment methodologies. But the flip side is I notice with a lot of the clients that I work with that do have the socially responsible investment methodology and personal values investing is they do tend to have hybrid cars. Mm-hmm. They're making a statement about this is who I am, the environment is important to me, but further I'm also kind of keeping tabs on my cash flow and how much money am I spending on filling up that gas tank every week. And
we have an electric car.
So it does make the additional statement. And also I notice that some of my clients that have the socially responsible investing methodology, that they also have like the solar energy in their home. So they're interested. It's an all-around thinking. It's not just around their investments.
Right. And then, okay. So alternative energy.
Right.
So the problem that we get with some of these people that have these interests, and part of the reason again why you're using these various funds, is that too often they may be tempted to make really heavy investments in a single company.
Correct.
And some of these companies, frankly, they're just extremely high risk.
That is correct. Again, our methodology, whether it be social investing or otherwise, is the diversification within the portfolio. No heavy concentration in one single stock. These mutual funds that we are basically privileged to use provide that great diversification, but also meet the value system.
Mm-hmm. Okay. Well, how do fund managers screen these investments?
Well, the institutional funds that we worked with are designed to meet the investor's need in looking for their values and their beliefs. And there's a third-party screener that comes in to look at criteria of each company and are they meeting that criteria? Is that particular company that the mutual fund is investing in, is it meeting the socially responsible or sustainable criteria? But some of the things to look for is ESG integration, which is environmental, social, and governance. And it's factors that is used in the investment analysis, and the third-party screener looks for that in the various companies that are in these funds. Also, again, the shareholder advocacy, that comes up a lot when you're doing research on the socially responsible investing. How much is the company being a good corporate citizen? How important is that to them? Is that in their guiding principles? Is that part of their mission and vision statement? Then community investing. Are they working with the local banking system? Especially this would be something very interesting in the emerging markets area. How much are these emerging companies working with their own community? Mm-hmm. So it's just, those are some of the things that these screeners look for. And if these items are not met, plus a long criteria checklist that they have for both socially responsible and sustainable investing, then they're no longer part of that fund.
Okay. So some people are also concerned about things like, you know, is this a company that sells tobacco products? Is this a company that sells liquor and then meanwhile they have these conglomerates, and maybe, you know, it's a piece of the company. It's R.J. Reynolds, and you know, so they've got the tobacco, but they've got tons of other things. So
this is true. A lot of the companies have spin-off companies, and it depends on how pristine you want your investment methodology to be. Most of the investors that I'm working with at this level of personal values are okay as long as that one company, whether it be a spin-off of Philips as an example, if that one company that's been spun off is actually doing the socially responsible or sustainable investing. But the screeners also take care of some of that, because these big companies can't have more than 20% in tobacco in any of their companies. Okay. That's one of the criteria.
So they do have a screen where they say, okay, well, you can't have more than X% in the sin industry or whatever.
And that is with the funds that we work with. That is the criteria, that 20% can be in all companies that the parent company works with. Can have that much in tobacco or in other areas. Yeah.
Okay. Okay, so how has designing a portfolio with a socially responsible or sustainable focus affected the return and risk for investors? So, you know, in other words, are you really taking it in the shorts by deciding to take this approach?
Well, I am pleased to report from the time frame that we have been actively working with socially responsible and sustainable investing, that the funds that we have worked with have beat their benchmark on every occasion. Before coming here today, I decided to go back and take a look at each quarter. We get benchmark reporting quarter by quarter, and through the 5-year time frame, the socially responsible and sustainable investing has beat its benchmark, which is great news. However, the funds are new enough that we do not have a 10-year record yet on it. So, but looking at the fact that we went through a horrific meltdown, and some of these funds were just getting launched right during that meltdown, and the fact that they have been able to recover, they did not have the long-term track record of some of the other funds that were not socially responsible or sustainable, and that they have been able to beat that benchmark, I think is pretty significant. Okay. It promotes being able to work with the client that wants to do personal values investing, that we're not, as a financial advisor, putting them at risk of not being able to have an inflation-adjusted income stream in their lifetime.
Right. So for some people, maybe they've got a little play money, and so risking it isn't so bad. But for other people, we're talking about the nest egg and having to provide for a retirement. And so you need to be able to have an income stream and enough growth there that it's going to be able to take care of them.
That is correct. And I've had some clients that will work with me to help diversify their portfolio. Again, we feel very strongly about the mutual fund family that we work with. And there are some areas where we don't yet have the socially responsible and sustainable funds. And that's primarily in U.S. microcap stocks and in international small cap stocks. So with an explanation to clients on how those two additional forms of diversification can assist them to be able to live the life that they choose to live, but also being able to do the personal values investing, I have been able to get them to also include those two funds in their portfolio design. And one comment a client made to me is, gee, by doing this, my future income stream is great enough that I'm able to help create scholarships for young girls to go to school.
That's great.
So it depends on each person's goal and what they want to do, but if they have the income, they can replace maybe that their investment methodology isn't quite the way they would like it to be, but they can go out and help the social responsibility, or they can do something with the environment that they choose to do.
Okay. So I'm guessing we've got about 8 minutes or so. So quite a bit of time, really.
Right.
And so I think what a way to maybe to share a little more related to this is if you can maybe tell us a little bit of a case study, an example maybe of a client that you worked with on this type of the issue in developing their investment program.
Well, I have two examples that I can use, and both of them are from women that received an inheritance.
Okay.
And both of them came to me almost at the same time. It was around 2011, and felt that they had received a huge gift.
Mm-hmm.
And wanted to do well by that gift.
Mm-hmm.
Not only did they maybe want to do some little personal things for themselves, because this gave them the opportunity to do that,
Mm-hmm.
but more importantly, they wanted to be, in one case, the individual has no children and wanted to help other family members.
Mm-hmm.
So this is a legacy account.
Mm-hmm. Mm-hmm.
It's an account that is going to just sit there and grow.
Mm-hmm.
And on the other hand, though, it was very important to her that it be something that portrayed her own personal value system.
Mm-hmm.
So we talked at great length about how best to invest the money, and came back with the fact that socially responsible, a component of socially responsible, a component of sustainable, and again, as I mentioned briefly, that because we didn't quite have the diversification that gave that legacy growth that she
Mm-hmm.
wanted to have, we added the two funds that did not have the socially responsible and sustainable methodology behind them.
Mm-hmm. Mm-hmm.
So she is really happy that she has a legacy account. She has portrayed this to the people that are important to her. She has told them about it and is considering even adding some more to that.
Oh, that's pretty nice.
So that that her family will persist.
Mm-hmm. Mm-hmm.
In the other example, this is a woman that very much cares about her family and is very much an advocate of doing right by others,
Mm-hmm.
by maybe more socially inclined than sustainable. However, because at the time that's what we had to work with, there's the combination of the two.
Uh-huh.
But the goal was to be able to help others. She really felt that she had been given something special and had an opportunity to create something.
Uh-huh.
And that's really fun for me to watch, especially to watch women be empowered with the money that they have and have their own ideas, the creativity that's there, the passion that's there. By nature, women tend to be more nurturing. I think that's maybe overused, and it's a generality. But with these two ladies, that's what I heard from them. It came from their heart. They wanted to be able to help those that they cared about, but they also wanted to leave something behind, not just for their own heirs and beneficiaries, but leave something behind that helped others by how they had invested and helped the environment by how they had invested. So that those were really good conversations. And by the discovery process that we go through when we meet with our clients initially, we're able to find out what's important to them. Why are they coming to a financial advisor at all?
Mm-hmm.
And in that process, we find out if they are so inclined to be more socially responsible and sustainable, or do they really want to go mainstream and just really guarantee themselves that they know that since 1927 through the end of December of 2012, if they had remained in the stock market that total time, they probably would have earned about 9.5% interest. We say you probably, give or take, you'll get 10% over your lifetime. Mm-hmm. That's the critical phraseology, over your lifetime.
Right.
And, we don't really know that yet with the socially responsible, but we got a good start here to say, gee, if you've got 7,500 companies and you're globally diversified, you've got pretty good diversification going on there. Mm-hmm. And if you hold it, buy it and hold it like we recommend, let it go up and down and zig and zag and whatever the markets do, over your lifetime you will benefit from that.
Okay. Got about 3 minutes left. Have you been finding any alternative investments that fit into this socially responsible and sustainable investing mold?
You know, that's something that as a firm we have the opportunity to do because of the funds that we have available on the alternative side, something other than equities and bonds. And that's a good question for us to explore. We have not done that, and it's the possibility to do that since we do have investors who are accredited, meaning that they have $1 million of investable assets outside of their home, and they may be very interested in something that's more socially responsible or sustainable. So always good when you're doing a public service to learn something from it, and that's my takeaway from today is to let's see what's out there in the way of an alternative that's socially responsible.
Okay. So we just have a couple minutes left. Maybe you'd like to throw out some final thoughts about people that are interested in pursuing this further and so forth.
My biggest comment would be anybody who is interested in investing dollars that they have is to look for a fee-only financial advisor, somebody who will work with you, be with you, and advise you properly for your circumstances. Are these the funds for you? Be able to discover with that person that socially responsible and sustainable is what will work best for them, or they may come back with some other alternatives for that person. So my advice is get that trusted advisor, work with someone that you can trust, but do check them out, see if they are fee only, and if they're going to be working for you all the time.
Right. So if they're fee only, the idea is that you're both on the same side.
Correct.
That you both benefit when the whole plan works out. As opposed to a particular scenario that, just pushing an investment and then being compensated with a commission or whatever.
Correct.
Yeah. Okay, folks. So I guess I'll throw out my last thought. I hope that you have found something to think about here, something maybe to look in further. This idea of socially responsible and sustainable investing. I found even older clients, again, have been interested in this and trying to do good while they're doing well with their investments.
Correct.
And we'll see you next time on Financial Insider Weekly.